Dwight Goodwin is a CPA of over 30 years now, and he's had a lot of experience doing tax work for anyone from a small little single W-2 individual to a large multiple 6, 7 figure business. He's worked with a lot of high profile individuals in the music industry. So Dwight has a very elaborate skill set when it comes to the tax space. He's served as a controller, CPA, CFO for a handful of different companies. Right now, he's working for Harley Davidson, Rough Rider. But no, I just want to thank Dwight for coming on here. He's been a huge role model in my life personally, and pretty much any financial savvy that I have comes from being raised by Dwight. So I'm very thankful for that in my life. And like we said, his time is very valuable. So I'll hand things over to Dwight and let him teach us a little bit taxes today.
It's an honor to be with you, Ty. Thank you for that nice introduction. And Leo, it's good to see you again. Ty asked me to give kind of an introduction to what you might want to know as a small business startup and for tax purposes. And so that's a great logo. 7 figures funding, tax tip for filing success. So as Ty mentioned, I was in public accounting for 10 years with Deloitte and Touche at first, and then another regional firm. Did a lot of tax accounting there. Of course, I was a tax specialist, so been a CPA for over 30 years and helped a lot of businesses, I hope, with just some of the organizational and thought process that we need to have to be successful in our tax compliance and our tax planning. So without further ado, I'll just jump in here and see how this journey begins. Because I'm here in the Mountain West, I'm staring at the mountains all day through my other window. I decided to take you on a journey through some mountains. So, oh, yep, there they are. There's the peaks. First step that I would always say when you're starting up a business is that you separate your business from your personal. Even if it's just a sole proprietorship, get a separate checking account. And so basically, my recommendations would be keep a separate bank account for your business and keep your accounts straight and separate, and do a separate bookkeeping for your business. The worst thing that can happen at tax time is that you hand your CPA or your accountant a whole bunch of receipts. That's just going to cost you a lot of money because he's got to summarize all that stuff. So if you have a separate bank account, it's a great start. Only income goes in, only loans from yourself go in, loans to yourself come out, loans from a funding source comes in. So keep those accounts separate. I know that 7 figures is big on getting business credit. And so that credit should all be accounted for in your business ledgers. So keep it separate, don't commingle it, keep good records, okay? Second tip I would give you is to know your business type. I can't tell you how many people start up a business and they really don't know what kind of business they're running or what kind of business they're trying to run. And if you don't know your business type, you're going to mess up a whole bunch of things. So where do you start? The simplest default entity for business is called a sole proprietor. It is filed on a Schedule C, generally, on your personal return with your personal taxes. Everything flows through to you personally. It's a sole proprietor. It's the easiest, simplest form of business. But even if you're a sole proprietor, like I've already said, I would say let's have a separate bank account. It's just not that expensive, and keep those bank records separate from your personal. The next step would be an LLC. Some people think that an LLC is a limited liability corporation. That's not really correct. It's limited liability company, but it does provide some limited liability, just as its name implies. So an LLC is pretty easy to form in all 50 states. You want to make sure that you form your LLC in the right state so that you can take advantage of any of your tax situation. And everybody's tax situation is different. So, for example, if you live in California and you form an LLC in Nevada, unfortunately, California still wants you to form an LLC or register that Nevada LLC in their state and pay a whole bunch of fees. If you're not in California, that's great because it's a very expensive state to run a business. But an LLC can generally be formed online with the state using state templates. And it's very easy to do. You can start with one member. The owners of an LLC are called members. You can start with one member and have as many members as you'd like. A one-member LLC has the distinct pleasure of being treated like a sole proprietor by the IRS. So if you're a one-member LLC, sometimes you don't want to be a one-member LLC. So it's good to have a spouse or a partner that you can make the other member so that at least you can file a separate tax return. I believe in doing a separate tax return for an LLC just because it separates your business from your personal in just one more step. There's also an animal out there, a tax animal called an S corporation. And an S corporation is really just an election that either an LLC or a C corporation can make, but it is taxed. All the income flows through to the shareholders of the S corporation. The election that's made by either the LLC or the C corporation make that entity taxed as if it were a partnership. Everything flows through on a Form K-1. So I have I worked with a lot of small business clients who started up and they've started an LLC and they don't understand how the income gets down to them. They think that the LLC pays its own tax. The LLC and an S corporation do not pay their own tax. All that flows through to the personal returns of the shareholders or members. And those people have to pay the tax on the earnings. Another misconception is that, well, I didn't take any money out of my company. I didn't take any money out of my S corporation. I didn't take any money out of my LLC this year. Well, if your LLC made money, you still have to pay tax on what your share of that earnings were. So be careful. Know what your business type and know how it works. Educate yourself. And I know Seven Figures does a lot of education pieces and has a lot of education opportunities like this to help your clients know what business type they are. So I always recommended a sole proprietor first, keep it simple, and then an LLC, and then later making an S-Corp election, because there are some more tax savings you can get on the payroll side as your profits increase. There are a few more costs associated with the S corporation and a few more complexities. So I don't recommend it until, probably you've got $30,000 to $50,000 in net profit that you want to start giving to yourself or paying yourself. But I almost never would recommend a C corporation. C corporation is never a place where you want to put assets. C corporations are taxed twice, once as a dividend and once when you sell the business. So that's a double tax, really. I don't recommend an S corporation for like a property with passive income, for example, like rental properties, anything with the appreciating real estate. I would keep it in LLC. But your operating companies, either LLC or an S corporation. Hope that makes sense. Then my next tip is use a system, but use a system that makes sense to you. There's a lot of systems out there that people are using these days: QuickBooks, FreshBooks, a simple spreadsheet, either in Google Sheets or Excel, a bank system. Sometimes your bank will even classify all of your expenses and your income, and you can just classify them there and then run reports. you know, if pencil and paper works for you, do it. But I encourage all my clients to update their numbers on a periodic basis. Sometimes it's weekly, sometimes it's monthly, but get a system going where that you're updating your numbers. You don't know if you're making money if you're not looking at your numbers. Sometimes we just fly by the seat of our pants as a new business, and we think we can make up volume when we're not even making margin. So you can't not look at your numbers. You got to know what you're doing, and by using a system, whatever works for you, use it, and use that system consistently, and then help give that information to your CPA or to your tax preparer. I personally have used QuickBooks for years. It can be confusing though. So there's ways where it's easy to take in income twice, and you don't want to do that. So make sure you know what QuickBooks is doing, and if you need help, get help from a QuickBooks educator or professional. But use a system and use it consistently. So that would be my next tip. It's hard to start. It's hard to keep records starting December 1 and trying to finish up before the end of the year, and then you got till a deadline in the next new year to file. And so keep it up regularly. And number one, you'll know what your profit and loss is, what you're doing, where you're spending your money. And number two, you'll have your books ready for your CPA. Just another tip here. Know your submission deadlines and always file. The submission deadlines have changed a few years ago now for LLCs and S corporations and C corps. It used to be that those were due LLCs could be filed on April 15th or April 18th in this year, but they are due March 15th. LLCs, S corps, and C corps. And then another important thing to realize is that sometimes you're paying contract employees or W-2s, and those generally need to be prepared by the end of January and filed by January 31st. So there's some penalties involved with a late filing of a return, and you just don't want to take those if you don't have to. It can get very costly, especially if you have a number of 1099s that you did not send out and did not properly report. April 18th this year is the personal tax return due date. And remember, there are extensions available, but extensions do not extend your time to pay your tax. They only extend your time to file. So make sure you paid in your tax with estimated taxes or tax withholdings, however that's going to be, by the proper due dates. And there's a ton more due dates when we talk about estimated taxes and such. And we can answer questions there too. But know the deadlines. When you set up an entity, I always give a little copy of a sheet that says that you are an LLC. These are your deadlines. This is when you need to file this. This is when you need to get to me on this. And it helps the new startups know their deadlines. And I often get the advice, well, I don't have the money now. I probably won't even file for a while until I do. Well, the penalties for not filing and not paying are two different things. And you don't want to add injury to insult. So I always just say, my advice is always file and then pay as soon as possible. You lessen the amount of penalties that will be incurred on you.
Dwight, can I ask a question on that one real quickly? Because I think that's something we get a lot from our clients. It's like, we'll ask for their tax returns and they're like, oh, I'm filing an extension. And I think most of them do have the understanding that I'm filing an extension so I don't have to pay my taxes right now. So saying, it's great that you're doing an extension, that doesn't mean that there's no tax liability due. I would strongly advise you still at least go get put on a payment plan or something. Is that something that people can do, is start a payment plan when they file an extension, just so they've submitted something?
Absolutely. Get your return filed, establish the liability, and then start a payment plan. And most of those payment plans that are under, I think it's $10,000 now, can be, you can just basically work it out with the IRS right online to start an installment plan. I think it's always just best to, of course, pay as you go, but again, the extension does not extend your payment time. You will be penalized, and you will pay interest also. Now, the interest with the IRS is not super high, and but it's higher than you'd like to pay, I think.
But you can pay that tax with a 0% interest credit card, correct?
Oh yeah, that's a great idea. The 0% credit card would be an excellent idea to pay. Otherwise, you'd be paying 9.5% to the IRS, and have the hassle of installments. So yeah, great idea.
Sweet.
Sweet idea. Ty is
You know,
actually smarter than I am, so just if you have any tax questions, just ask Ty. No. Okay,
Definitely
so
not.
next one. I would suggest that as you set up your business, that you understand the taxes that apply to your business. So when you set it up with your attorney or with your CPA, with your financial advisor, understand what taxes are going to apply to you and when they're due. We've already talked about the due date and submitting on the due date. There are three basic taxes that probably affect a lot of our clients that are in the startup space. First, we all have to pay income tax. If we make money, we're going to pay income tax. If we make money as a sole proprietor or a member of an LLC, remember that income passes down straight through to the individual. We have a self-employment tax, another 15.3% tax on top of that. That basically represents both halves of our FICA and Medicare tax. If you're an employee, many of us have been employees, you realize that we're paying 7-point-something% for our FICA and Medicare liability out of every check. But our employer has to match that. So as a sole proprietor or an LLC, you basically are paying both halves of that. And in regard with self-employment, as I've already mentioned, there is a threshold where I feel like an S corporation, depending on what the assets and operations of the business are, where an S corporation could actually be elected down the road to save some self-employment tax. So there's some scenarios there that can really give you some savings. Another one is sales taxes. A lot of people have no idea about sales taxes and how to do it. We used a Shopify business model here at Harley, and we were responsible for our own sales taxes. Of course, we're a little bit more sophisticated than most, but know what your platform collects for you. For example, eBay, the platforms where you can sell online, Amazon, many of those are now collecting the sales tax for you. Know what sales taxes are due and where you have what they call nexus. So there's a word to throw out to your tax preparer. Do I have nexus? And there's multiple kinds of nexus, but sales tax nexus has to do with, right now, has to do with the volume you're doing in a state, either dollar-wise or shipment-wise. So know whether sales taxes are applicable to your business, and don't get caught in the trap where you haven't collected any sales tax or paid any sales tax. What else do we have here? Oh, hey, be aware of deductions. There's deductions still out there. Any deduction you can take as an S corporation, you can take as a sole proprietor. So there's not really an advantage as far as you get more deductions here or more deductions there. There are some nuances with S corporations and retirement plan provisions and stuff like that. But in general, anything you can deduct as a sole proprietor or an S corporation, they're just all the same deductions. So don't beware of the deductions, be aware of the deductions. So what does that mean? That means look at home office. Are you taking advantage of home office deductions? There's a simplified method now, and there's an actual expense method. Some people don't like to keep track of their utility bills and what percentage of their home is dedicated to their office. Hey, do the simplified method. It's easy. Business mileage. There's two methods there too. There's the business mileage and then there's the actual. So be aware of what you get paid or can reimburse yourself from your entities for your vehicle use if your entity is not quite yet in your business. Your business mileage can be a great deduction. How about cell phones? How about internet? How about all the software apps that you might purchase to help you do your business and keep track of your inventories and such? All those things are deductions. Another big one for startups, especially in the online space where you're doing merchandise sales online, you want to be careful of how you cost your inventory or expense your inventory. There is some provisions out there under the IRS that says that you can basically, if you're a smaller seller, you can expense the inventory when purchased. But the problem with that is sometimes you have this big lump sum of a purchase, and then when it's sold, you think it's all free and clear. It's good to have a system where you can say, this is what I bought it for, this is what I'm selling it for, and here's my profit on each unit. And so that would be called the cost of goods sold search system when inventory is sold. So know what kind of deduction you're going to take and work that out with your tax preparer. Travel, what's your primary purpose? Is there a way to adjust your travel so that your primary purpose is to seek out business opportunity? Travel is a good one. Another one is when you buy equipment. We still have the bonus depreciation in Section 179 out there so that we can basically buy expensive computers or equipment that we need in our business and take all the deduction in the current year. Now, bonus, you don't have to have any profit in the current year, and it can actually take you into a loss situation where Section 179 depreciation will let you write it down to the point where you have zero net income from your business operation. So beware of the deductions.
So I know oh, sorry, I didn't mean to cut you off there.
I'm good.
I know you only have a couple more minutes, but I feel like deductions are where people get very confused. And we talked a little bit about this in the podcast where sometimes new businesses just get so, oh, it's a write-off. Oh, it's a write-off. And I think they have this misunderstanding that a write-off means it's literally just going to be free because you get to write it all off and you don't pay anything for it. Can you kind of explain what a write-off, when you talk about, because these deductions, write-offs, kind of a similar term, what that actually does to your tax liability, because it's not just free money.
No, it's never free money, and you don't want the taxes to the tax tail of the dog. Let's say our economy, personal economy, is a dog. Our taxes that we pay is the tail. We don't want the taxes to wag the economy of our dog. We don't want to make business decisions based on something that's going to affect our taxes. There's two kinds of concepts there, Ty, that you're talking about. One is a deduction. A deduction means that it's an offset against income if it's eligible deduction. A credit is a $1-for-$1, or could be a $1-for-$1 offset against your tax liability. So there is a difference there. And it is important to understand that a deduction is not free. Number one, you have to pay for it. But so you don't want to do something that's not business savvy just because it's a deduction. It still needs to make sense to you in your economy. Okay. I hope that helped a little bit. Got one more step because we got 7 figures, so we got 7 steps. And the last one is to consult a professional, a tax pro. If you have questions, just ask questions. there, a lot of CPAs will give you a half-hour free consultation just to get to know you and see if you're a fit for their business. But ask questions, educate yourself. And I guess Ty, what I'd say about deductions and taxes in general is people hear the word taxes and they just shut down. They think they can't do it. They can do it. And I think that's what you need to tell your clients. You can do this. This is stuff that's possible to understand and then plan your life around. So just don't be afraid of it. Jump off the cliff, get in there and start learning. And that's I just commend you guys for how much you guys put out there in education and in your podcasts and such. Well, we've had some serious discussion here. It's been pretty boring, but
a lot of value bombs dropped today, Dwight. We really appreciate it.
Well, here's the biggest one. Do you remember KISS, the acronym KISS, keep it simple, stupid? Well, I have my own one. It's called KISS 2. Oh no, not KISS 70s rock band, but that's actually Ty's favorite band from the 70s. Actually, I was raised in the 70s and loved them, but anyway.
I thought it was Barry Manilow.
So, so here's my KISS tips, my KISS tax tips. Keep it safe and separate. Keep it a sole proprietorship or an S-Corp. Keep it a steady system. No important submission spans. No self-employment or salary for S-Corps. Keep info for significant subtractions, that's deductions. I had to use an S word. And know a seasoned specialist. So I hope that helps a little bit.
I think the biggest thing that you said, and this is something that when you talked about not having your books done correctly or counting income twice, those are things mistakes that I personally made. That Dwight and I had to sit down for quite some time and hash out. And like you said, it's just way better to do it right the first time. I think it's really important that we encourage all of our clients too. It's way more expensive to make a mistake and have to fix it than it is just to do it correctly the first time. Sit down, meet with a CPA, meet with a tax professional. Like Dwight said, so many will do free consultations.
Yeah, just the most important thing, if you're a business owner watching this, just make sure that you're taking the action, asking the questions and getting ahead of this now. The worst thing I did as a young business owner was I didn't have these things in place. And all of a sudden I was 2 years behind on filing my business and personal taxes. And it makes it very difficult to catch up. So you're better off investing the time. And as Ty said, doing it right the first time. And that means you don't try to figure it out. It means you run your business and you bring a professional like Dwight in who knows what you need to do so that you aren't wasting time and you get your taxes taken care of. And there's nothing worse, no worse burden personally or as a business owner than feeling like, oh man, I am so far behind on my taxes, I'm never going to catch up. So get caught up now, take action and meet with a professional. And that is my takeaway from this training. Thanks so much, Dwight.
You're welcome. Thank you.